So what's genuine savings? Well, it's a metric used by the banks to assess your application. It describes a specific savings pattern in your transaction history, which is needed when you don't have a 20% deposit, and forms a requirement as a part of the home loan application process. Looking at the 5 C's of credit, it would form part of the character and essentially shows that you're able to manage your money effectively. With this, given the bank's confidence to offer you a home loan even though you don't have a 20% deposit. And this is about 5% of the purchase price. So if you're looking to buy for say $300,000, then the genuine savings requirement would be $15,000 in a savings pattern. Or if you're looking to spend $500,000, well, this would be $25,000. You get the picture. So let's say you've got $45,000 saved up and you're looking to purchase for $500,000. If the bank requires genuine savings, not that whole $45,000 needs to be saved up genuinely, rather only $25,000 of it. So if 20 of the $45,000 was made on a punt or was gifted or found under the pillow, then happy days as a bank's genuine savings requirements are met with the remaining $25,000 so long as it's been saved up over a prolonged period. Stick around until the end because you'll discover how to get around the genuine savings requirement. And remember, hit that subscribe button below to keep up to date with all the latest. What's considered genuine savings? Well, there's really 4 types of genuine savings, and they include a savings pattern, equity, deposit held, and rental history. Let's break down each to understand what the banks are looking for. Firstly, genuine savings pattern. A genuine savings pattern is savings built up over a 3-month period before your application date. The key to a genuine savings pattern is for the balance to continue to increase over the period. Therefore, if you're looking to implement this one, it's imperative that you don't take money out of your savings account. Whatever money's in this account, once in, mustn't be touched. The caveat is that for some lenders, they'll discount any lump sum deposits within that 3-month period. And it's defined as any deposits over 1% of the purchase price. So if you're looking to buy for $700,000, any deposits in your savings in this account over the 3-month, which exceeds $7,000, wouldn't be considered genuine. So let's say you have a total $30,000 saved up over the last 3 months. Considering that one of your deposits was for $10,000 and the remaining were under that $7,000 threshold in the period. This would mean that whilst you have $30,000 in total savings, only $20,000 of this would be considered genuine. And a side note, things like shares, cryptos, and other investments can be considered a part of your savings pattern. Secondly, genuine equity. Genuine equity is savings derived from a home loan or the sale of a property. The coolest thing here is that for most lenders, they'll actually ignore how long these savings have been held for. For example, if you sold a car for $20,000 and immediately threw this into the home loan, which would need to have the access to redraw, then this could be considered genuine equity, as the money can be taken out of the home loan and as a result would be considered a part of the savings history. It's very bizarre, I know, and it doesn't make a lot of sense, but we have seen lenders take this as a form of genuine equity. So it's a great hack if you own property. The other form of genuine equity takes place from the sale of your property. So if you sold your property and received $50,000 in way of funds proceeds, well then this can be considered genuine equity, even though if it's only been in your account for 1 day. It's on the proviso that you can evidence the sale of your house. And you can do this by getting a copy of your settlement statement, which is something your solicitor will be able to give to you. Genuine deposit held. This is the third one, and it's really cool because no matter where the deposit was received, once in your savings account for 3 months, it can be considered as genuine savings. Whether it's gifted money, won from a punt or on the pokies, or even if it's found in a briefcase. If this money was put into your savings account and wasn't touched for 3 months, this is now considered genuine savings. And finally, genuine rental history. And it's worth noting that there are some limitations with the amount of lenders who can consider this as an acceptable form of genuine savings. However, those who can consider this as acceptable would need a few things. Firstly, you need to be renting through a licensed real estate agent, and all payments, including any additional, for example, if you have to pay the water, must be paid on time. Unfortunately, if you're boarding at your parents or renting through a mate privately, whilst you might be able to show your rental history and payments made on time each and every time, unfortunately can't be considered and won't form part of your genuine rental history. How do I get around the genuine savings requirement? Generally, the only way around genuine savings is by having a 20% deposit. Each lender's requirement differs slightly. However, there are a few lenders who will waive the genuine savings requirement so long as you have a 10% deposit. That is, a maximum borrowing of 90% loan to value ratio or less. And the best part is that this 10% deposit can be made up with government grants, gifted monies, sales of assets, practically anything so long as it's not borrowed funds from credit cards or personal loans. So there you have it. You're now an expert on what genuine savings are. So it's over to you. Are you looking to buy your first home? Did you know here at Hunter Galloway we help people across Australia? So whether you're looking to refinance, purchase or build, you're in good hands. Reach out and call us on 1300 088 065 or visit us online, huntergalloway.com.au. Thanks for watching, and remember, hit that subscribe button below, and I'll see you next time. Bye for now.